Alrighty, it's Saturday, December 13th, and I know the market is closed, but I still like looking at the charts. I don't know if that's corny. I don't know if that's pathetic. I've heard different thought processes. You know, I don't want to say I'm the kind of person who used to do their homework all the time, and then do extra on the weekends, even though I didn't need to, but it helped me practice. And so I thought I'd share this because this is sort of what I do on the weekends, especially on a Sunday, but I think it's okay to do this on a Saturday. I think I might record something on a Sunday too when the market is actually open. That way you can see, and anyone can see, if you're not familiar with looking at the markets and kind of going through analysis and try to figure out what to expect for the day, maybe this can be just like a small little reference point. So right now we're on the hourly. It's a good idea to look at the week, right? Because the week is over. It's Saturday. And so the week has been, for the most part, bullish. It's had this nice dip here, but for the most part, we have been in this up and up sort of move. It's only just here that we've become bearish. And I don't know if anyone would want, but I have no problem like sharing how to decipher bullish and bearish. But this is just really more of a casual, technical look, nothing intense. So if you don't know how to read candlesticks, I mean, you can understand the concept of, you can see that this is like a line that's going up. You can see that that means it's bullish. And so the market's been having sort of a bull run here since, I mean, more or less looks like since July, but beautiful, which is NASDAQ, and ES usually mirrors that. So it's about the same. And so and this is just every week, but if we look at it on the daily, again, pretty much bullish for the most part. We've had this dip, but for the most part, we've had candles that have closed above that most recent high. So we're still kind of in a bullish move here. So when I look at that, I go, okay, so I should just keep in mind that we're likely going to be bullish. Then the next thing I tend to do is to look for support resistance lines. I know you've heard that all the time, supply and demand spots. I really don't trade them, but I think it's nice to look for them. I look for, this is a pretty high spot here. I look for where price hits quite often, like price hit here, 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 here. It's not super clean. I look for something more so like this, maybe. That kind of helps as well. Nothing really here, but probably up here. I can see that. This yellow line that I have drawn here, I have this yellow line here to show my last swing high and swing low. A swing low is my low point. Candle going down, candle going up makes a low. Candle going up, candle going down makes a high. Between there, this is my swing. So if I see a candle below here, my expectation is to wait for it to respect this space here by going back and then testing back down, or somehow crossing over, testing it back up, and then going back up towards here. If it's going to keep bullish, then I expect it to move into this space. So that's what I usually make these blue. The yellow's throwing me off. So yeah, this is kind of what I do for NASDAQ and for SPY specifically, because these are the ones that I trade the most. I do the same for Forex market. And when my money for options decides to clear, because that's been taking forever, then I'll be able to do the same for the options market. I'm just changing the color of these. It's supposed to be really like a blue. Let's see, blue. Yeah, so here I do the same thing. I look for, hey, this is a really good height to look for if I feel like the market is bullish, which I think it is. Then I'm going to look to see that Market hits that, I'm going to expect price, which, interestingly here, this is what's nice about trading ES and NAS. Well, it doesn't really matter. Yeah, what's nice about them is that you can compare the two um, pretty well. Like, hey, this one had this really strong bearish candle with another bearish candle and closed down here versus ES. This bearish candle is still closed between here and this part of it is out. So, is it possible that ES is signaling that we're not going to really be bearish for long? We're going to retrace back into this space and potentially go up? Possibly. That's a nice thought process. A lot of other pairs or other instruments that we trade don't react to each other, so you don't really think about them all. You don't compare one to see if it can help you figure out the other. You just sort of deal with whatever you're dealt with. I think this is on the daily. It's not a very good one. So I'm just looking for where I feel like I might see familiarity. Where have I seen the market touch before, and more than once? Like, could it be here? Could it be there? You know, um, this is just visualization. It doesn't mean like I'm expecting this market to go down by Monday and I'm expecting to take a trade, because realistically, when you measure out the market and how it moves, um, ES and NS, they don't move somewhere, depending on news data, things like that. They expect lowest is about 200, 150. The best I've seen it move so far in my journey has been like 600. And that's when the market just tanks crazy. It's not even been on FOMC days. It's just been like that. But yeah, so I don't expect this to move so significantly in one day. But hey, anything could happen. That's kind of the beauty and the frustration, I guess, about the market and not being in control. So yeah, I don't really do much. Again, it's a Saturday. There's no real market going on. I just look to see what did I miss, what support levels did I not mark off, things like that. Sometimes I back test if I'm looking at a new um, strategy. I'll back test when the market's not moving, and I'll back test during the periods where I trade, so see um, I can see if my strategy works or if it doesn't work. Let's see. I'm looking to see if this is another. This could be. I mean, I might just be looking too hard here, but this could be something here, something to look at. Which, I mean, realistically, on a 1 hour, it's not impossible. It's possible that this price will go down here, reverse back, maybe dance around here before it goes back up, being that we are somewhat of a bullish market on the higher time frames. So this is what I kind of do for all of them. I don't really focus too much on support and resistance. It's not really my thing. My thing really is liquidity. I'm looking at liquidity. I'm looking to see where price wants to do, a fake out. Where does it want to pretend that, it's going to pretend that it's going to go in this direction, and then it's not, and it's going to end up going in a different direction. That's what I want to catch. I want to catch it before it flips and respond on time. And that's really my thing. That's all I really pay attention to is liquidity. And I tend to focus more on the 5 minute mark. So like today is the 13th. If I look at the pre-market from yesterday, Saturday, let's see, at 8:30, which this is marked at 8:30. Let me mark 3:30, because 3:30 or 3 o'clock is New York time. So if I mark 3 o'clock, hard to see here. And then I mark Asian session, which I know there are indicators for this, but I just like doing it manually. I think it builds my, knowledge base for myself. It makes it easier for me to just remember what to do. So, London is probably right here. I don't want to throw any more marks, but basically I look to see if in the pre-market or in the post-market or in the current market, excuse me, if price goes above any of the most recent highs that are formed. That's all I'm looking at. I started off doing technical and now I'm going in, but yeah, this is basically the concept. The concept is I'm looking for where market's going to fake out and make us think we're going up and then completely go in the opposite direction. That's all I'm looking for. And in this regard, just using this as as example of how I look at my trades, market sort of going, it had this high peak here at some point through 15 or so. This is a high point for it. Asian market, this was a low for it. This was a high for Asian market. So London market took out Asian low and reversed. Ideally, you would expect a continuation towards the upside. For me, that did not happen. I've noticed too that sometimes the high of the previous session, so this is the London session, the high of this session may not be taken out, but the most recent highs made in this session might be taken out. And I notice if you have some, what is, I guess, textbook calls it relatively equal highs, some highs are kind of stacked, like this is a high, this is another high. These two are kind of stacked, not close to each other, but they're close. And I always forget about these, or these, this kind of high here, this kind of high here is sort of close. When you have relatively highs, those are pretty strong draws on liquidity. So you would have a price kind of go above those and give you the idea that, hey, we're going to keep going up. Hey, that's awesome. And then all of a sudden you'd have this break down. And so that's what happened yesterday. And so basically I looked for fair value gaps. Fair value gaps allow me to see where there's a gap in the market. The market recognizes that it needs to be filled, and then not only does it fill it, it then drops back down. And here is where the gap took place. So here, I can zoom all the way in. Give me a second. I'm doing two things at once. When I'm looking for a gap, I have to be patient, especially when the market newly opens, because it's doing a lot of, I guess I'm going to call it recalibrating. So it's not going to present itself immediately. Typically, I try to wait until the macros, which would be around 950, but sometimes you'll see a gap a little bit sooner. So here, price went up above those relatively equal highs over here, and this is in the pre-market. It did that. So then I'm like, okay, cool. So that means we're going to drop down in New York market, because New York market starts here. So now I start on the 5-minute looking for gaps. And basically a gap is between a previous candle ending and it's kind of funny to describe. It's really just a space between 3 candles, the gap between them. So here you can say from the stick of this candle to the stick of this candle. I'm not going to use proper terminology because I don't care to. So I draw this fair value gap here and I wait for the next candle or the next 2, 3, 4, 5, whatever candles to come in and acknowledge that it exists. It doesn't do that. Okay, so then I remove that one and I go down to the next time that I see one. Oh, I see, and there has to be a reasonable gap. Like this is going to be too tiny, but it can't, there has to be an actual, if you draw that little square, there has to be something. Now that's kind of a pathetic gap, but it's a gap nonetheless. Either way, it's not recognized. It's probably because it's too small. So I erase that. Then I go, okay, let's find the next one. Oh, look, we have a gap here. So just imagine, like typically this is not information, any data. So first you find this gap. You're like, okay, cool. Then this next candle is formed. It doesn't touch it. It goes up, it opens up here. It gives you your lowest point. It goes up, gives you your lowest point. And after 5 minutes is over, it closes over here. It never touches. Okay. Even if it gets close, I never touch it. I wait for it to do what it needs to do. So here I go, oh, cool. I'm excited. I think I'm going to enter in when it shows me that it's going to close out. So it closes green. That does not give me like confidence to go in yet. Yes, it's entered into this gap. Yes, I know that when it enters into this gap, I'm expecting price to drop down. Absolutely. But at the same time, it closed green. So if it's closing green, which is bullish, I'm expecting the next candle to also be sort of green, right? And if that's the case, then we're going to at some point invalidate my whole thought process of me being bearish, selling, going down. So let's wait. That's why the patience is probably the biggest part of trading that I have experienced is patience. Impatience will cause you to lose so much money. It will cause you to be stressed out. It will cause you to overthink. It will cause you to just like, it's such an important aspect of trading. And everyone talks about psychology and mentation. Maybe that's a part of it as well. But realistically, patience. Like, we don't have to make it fancy. We just call it what it is. You have to be patient. You have to be patient. You have to go to the bathroom. You have to go make breakfast during this time period. Like, you're not going to get a super, oh man, not most of the time are you going to get those moves in the first 10 to 15. So you got to be patient. You have to wait. So this candle was formed. Great. This candle was formed. Cool. This candle was formed. Now, if you understand candle patterns, which I've always kind of tried to understand it, but it was too confusing because I think there are so many different types of candle patterns. I just now focus on like 3 or 5. Now, actually, really, I only focus on 3 or so and 3 or 5 different types. And when I see those, I'm excited because I feel like a professional. And when I don't care because it's not part of my strategy. Here, I happen to see both candle patterns that I understand and my strategy being respected. This is a hammer. I don't care if it's called an upside down hammer or whatever it's called. It's when it's a very fat green on here and a stick. So I recognize this and go, okay, this could either be that it's trying to tell me we're about to reverse, because usually when I see this, I'm preparing for typically I'm preparing for what I guess they're calling an evening star, meaning we're going to go from green to red or from up to down or so. So looking at this candle made me feel like, okay, the market is not just directionless. There is a purpose happening here. And once I saw this amazing doji, indecisive candle, Jesus cross right here, I felt like, okay, this is the signal. This candle here means what we were doing before, bullish, we're about to reverse and go down. So when I see this candle, I go, great. Do I enter on this candle? I do not. It's still green. It did not close below this fair value gap. Did I enter on this candle? No, because it's still green and it did not close below this fair value gap. Now I get into this 5-minute candle and I see the wick, if you can tell, is just above the fair value gap. I'm cool with that. That doesn't bother me. Wicks just give you data. They do not finalize or make the final decision on yay or nay for are you going in my direction or not. So I'm cool with a wick. When I saw this thing close down here, a big gray or dark gray or black candle, the size matters because it shows you momentum, volume, and really strong direction. That's big on the size. And then of course the color lets me know we're going down. So cool. I'm comfortable here. So when the candle closes after 5 minutes, I'm entering on the next. I don't care if it shows me green. I don't care what it shows me. I'm entering on it. So I'm putting this position thing, which I'm not really a fan of this tool, but I try to use it to just, so initially you could say, hey, this blue line, which is this a blue line that's important? You can essentially aim for take profit key levels. So like take profit key levels would be other draws on liquidity. So where the price thought we were going to go down, it actually went up. Here where the price thought it was going to go down, it actually went up. Here where price thought it was going to go down, but it rallied and went up. Those are all key levels. So you could do take profit. So you could aim for take profit here, take profit there, take profit there. I probably would stop right here if I'm being realistic, because these are what I consider relatively equal highs. They're not perfect, but darn it, they're so close together. And I see 1, 2, 3, 4, maybe arguably 5 times that it has come down here. So I would stop here and be gracious with whatever profits I gathered, which would be a 1.3. If I put my stop loss here, which I do. I put my stop loss above this fair value gap because ideally, if this price were to have come up and taken this out, then I would say, hey, you've invalidated my whole plan. If I'm brave, I would have taken this trade like halfway through if I would have seen that the candle was closed halfway through and made this a 1 to 3.52 and been cool if I was that brave. But I didn't. I think I took it. Actually, I don't remember where I took it. It was a 1 to 1.5 return, and I was just fine with that. That gave me a 1.2 $1,200 return on each account, and I have 7 accounts, so that was fun. Yeah, and that's typically my trade, and that's it. And then if I'm the kind of person who has the time, which I don't usually don't, but I would wait for another level of liquidity to show itself. Where else will the market try to draw and make me think, oh, we're gonna keep going down, but instead we're gonna go up? Now, I mentioned these being your relatively equal lows here, so this is a draw on liquidity as well. These are key levels here because you've seen price show support in this place. So here I would draw some sort of line and go, I need to watch out for this. So if I saw price past this, that's fine because it gives the idea that we're still going down. But in this case, price passes it and then starts to reverse. So then I go, oh, I think we're trying to this is liquidity. It's taking it out. It's taking out this key level that we know from right here. Let's go ahead and prepare for another entry. So I look for a fair value gap. Do the same thing as I did above. I look for a fair value gap. I go, okay, let's draw this here. And do we have something? Absolutely. Price at first says, hey, we're going up. We're going up. You're like, okay, I might miss that. Now you get this, not indecisive, not hammer, but it's you've got a wick below, you've got a wick above, and you've got this thick brown. So, hey, we might be coming down. Let's just see. Then we have this really large candle here that's really promising. Like, yeah, we might be going down. And then you get this green candle, but what? It actually ticks into my fair value gap. That's promising. I get another candle that comes out positive. Cool. I'm going to enter in halfway. Put my stops there. What am I going to aim for? Well, that's too low there. I could aim for up here. I could aim for right here or so. There's no perfect aim. Clearly, it would have not hit your take profit. And the reason, but how would you know to get out if it doesn't hit your take profit? Like, how do you get out anyways and get, this is a 1.1 to 1.6 return. So let's say you enter in on this candle and things are looking all right. You've got a little candle here that's not great. This candle is good because I know I'm going to get green. I get green. And then you reach this point of resistance. This is awesome. This is awesome. This is why candle interpretation is so important. It's, sorry, I'm multitasking as I'm sharing this video. Candle interpretation is so important because you don't have to know like Trump is speaking, so that means boom, 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 this is going to happen. I don't even know what people mean when they say all those things. I mean, I understand the concept, but I don't put too much weight on it because it's not my area. Okay, I don't understand finance to that extent, stock, bonds, trades, acquisition, like, I don't know what you mean, but I understand how to look at something and interpret its meaning. When I see a green candle and then a black candle, then a green candle and a black candle. Now, this is not like this candle here where I go, oh, this is an indecisive candle. I don't know why they call this an indecisive candle. I guess they call it a doji candle. I've also heard it called an indecisive. This is not an indecisive candle to me because it is telling, it's decisive. It's telling me we're done going up. We're now going down. This is the same thing. We're going up, we're going down, we're going up, we're going down. This is indecisiveness here. Do I want to go up? Do I want to go down? Every time I go up, I get pushed back down. I go up, I get pushed back down. And then you get this indecisive or cross or doji candle, whatever. If you couldn't tell from these 4 candle formations here that nothing was moved above here, just a wick, no closure above this line, they pretty much made what? Equal relatively equal highs right here, if you couldn't tell like this is your signal to get out, then this candle was like, look, final warning. Final final warning. If you don't get out, you're going to lose the profits that you gained from here, which depending on how much money you put is significant. Okay. And if you put $1, then you would have gotten $1 worth. But if you put in 10K, you would have gotten one times that right back. So uh, these four candle formations here tell you immediately, like, look, things are happening. We can't go up, we can't go down. We might just end up going down because I can't even go past this point. Every time I go up, the sellers are strong, they push me down. When I try to go up again, sellers are strong, they push me down. And then I try to go up, but I went nowhere. Pretty much sellers met me in the middle, which means we're about to dip. So you have one chance here, first chance to figure that out, and then a second chance to figure that out before the market tanks. So you could have gotten out here when this candle was formed. That would have been like okay, this is my relatively equal highs. It's basically telling me, look, what are we doing? We're not going up, so you might as well get out because we're about to reverse. That's my warning number one. Warning number two would have been this doji cross candle, and then you would have seen the evidence flood down. So I did enter into both trades. I entered into this trade, and on Ethereum had this same presentation. I entered into that trade. Unfortunately, I was asleep here. So, so it dropped. By the time I woke up, I think it was over here. So I had not freaked out about the fact that basically it became my thesis, or my bias had become invalidated with this candle closing below the fair value gap. Once I saw it over here, and then you see these tiny, like, we have no volume, guys. Market's about to close. There's nothing happening. I basically got out. I think I had like a $50 profit on the S&P, and I think I had like a $170 profit on Ethereum. I traded those both on my live account on TradeLocker. But yeah, this would have been smart to get out. But I promise you, at 13:30, which is 12:30 my time, I was definitely asleep, and I missed getting out of that. So you don't have to be a guru to really understand everything. You just have to use what I'm calling common sense and interpretation of the candles, which is not complicated at all. Once you understand up, down candles, once you understand this doji, if you understand voluminous candles, like, wow, look at these big candles, look at the volume there, that definitely tells the story that we're moving, downward. Or look at this very, large green candles here. These say we're going up. If you understand things like that and have a simple strategy like fair value gap, it's simple to get in and out of the market and be profitable consistently. I don't have any indicators. Let me not say that before someone loses it. I do have this indicator, but I really I've said it before, I use it for decoration. I just feel like, oh, let me put something on here. Of course, I've watched other gurus and they talk about EMA and rah, rah, rah. I don't understand anything. It doesn't even mean anything to me, because this candle, this indicator, when they're like, oh, when it's beneath it, that means it's going to be bearish. Well, duh. I see that like it's forming as the candle forms. So it's not giving me any future information that I could use to determine the direction of the candle personally. So that's why I just don't even use it. I really do leave it here just purely to be decorative. Like, I just want something on there, but I swear I don't have a proper understanding of the EMA. I don't use it properly. And I know that there are, There are indicators for like session highs and lows, and session distinctions between Asian, London, and New York. And I think those are all fantastic. I've tried using them before. It just makes everything look too messy personally. And so I just don't bother with it as much. But there are indicators that help all the time. I think I'm the kind of person that wants to know naturally what something looks like so that I can figure things out for myself and not feel dependent on some system. Like, this is something I'm passionate about. I want to know it. And I like looking for my strategy everywhere I go. Like, hey, We thought we were going to go down here. We made this really gigantic green candle upward. We're about to be bullish. Let's look for some fair value gaps over here. Like here, I don't have any. That's a problem sometimes with looking on a bigger time frame. You will definitely see fair value gap, but you're talking about days, weeks, right? Like this fair value gap was made May 20 May 13th, but we didn't get a gap respect until the 23rd. But you will clearly get more money out if you use the same strat. First, the strategy works on higher time frames. One, two, you will make more money using that strategy on bigger time frames. But number three, who wants to wait a whole week, a whole week, a whole month before you see profit, right? Because let's say, yeah, oh my gosh, this whole day ends with the candle being in. Cool. Will you enter? No. You'd wait until what day is this? You'd wait until the 27th. Now, you drew this fair value gap on the 13th. Your candle respected the fair value gap on the 23rd. Then it gave you confirmation on the 27th because it closed out of it. Then you went on the 28th to get into it. This is why I'm not a fan of swing trading yet. So then you put your long position here. Am I drawing this right? Okay. Put your long position here. Stop loss below your fair value gap. And what are you going to aim for? Oh, yeah, that's right. S&P is at all-time high relatively. So you don't, oh, so sorry. You would aim for right here. You'd aim for here. Let's see. You'd aim for right here, which is a pretty good aim. That's a 1.38. Yeah. And that's not bad, but you'd hit your take profit right here, which is June 26th. Oh my God, I'd be so irritated. So just to recap, because it may not make sense, your fair value gap is made on the 13th of on the 13th of May. It's recognized or respected on the 27th of May. It's confirmed on the on the 27th of May. It's recognized on the 20s. Wait, what am I saying? Oh, it's hard to see on this. Okay, on the 23rd, excuse me, it's recognized. On the 27th, oh, it's a weekend. Okay, cool. Or maybe there's a holiday in between. On the 27th, it's respected. You enter in on the, because by the 27th, when the candle closes, the market is closed, so you can't enter. So then you enter in on the 28th, and you get out. You get out on June 26th, bro. No. In the grand scheme of things, it's beautiful. I think if I really didn't have time and all those things, this is fantastic. And look, I mean, clearly, as long as you are having candles that close above previous ones, you'd probably want to continue. Like, this is actually not bad. You would keep going, but this would take forever to see any profits from. And then just to reward yourself, you'd start pulling out partials just so you can be like, I really do have money, guys. I really am making money. But it's nice to know that the strategy that I've been using and practicing over and over again, and just keeping it really simple along with candle interpretation, can be used on any time frame. It just depends on your patience. You could essentially open up two different accounts. One that does intraday, where you're trading for that morning New York session, in and out, boom, boom, boom. And then another one that's more for the long game, for the swing. The other thing about it is that you'd have to wait for this moment. How would you know? Because you might wait and think, oh, right here, this might be, this I could potentially, because I see it going down, but I see this big green candle. So I'm looking to see, oh, I hit the fair value gap here. It closes out, enter, and then it gets invalidated. No, it takes you out. So then you'd wait a week plus for this to happen again. So it's not immediate. And I know we are a culture of instant gratificators. So waiting a week plus to enter into a trade is frustrating, but it should give you hope to know that these things could be done on a slower scale. Like if you're not comfortable with the rah 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 of the New York session and it being so fast and kind of being stressful, because it can be stressful when them candles go zoop zoop. My sound effects are ridiculous. But the New York session can trip you out, and it can be way too much and way too fast. And so this can be an alternate where you can go on the daily, and every day you just, did the candle end up where it needs to be? Am I seeing a fair value gap? Nope. Okay, I'll close my charts and wait till tomorrow. But it's the same process as doing it in the intraday, and I think I shared how that went. So I hope you found this useful. Somehow I started off saying I was going to talk about technical analysis because, I mean, on the weekend, that's all you can really do. But also, I like back testing my strategy too and just giving myself more confidence like, hey, you got it. You're definitely on the ball. You're definitely using something that works, is profitable, consistent, and can be seen on any time frame. Because you can imagine going on vacation, right? And being like, okay, I entered into a trade on this day. Let me just check and see. Boom. Okay, we're still in profit. Cool. Then I don't have to check my calendar anymore. I can set a little alert in case it goes, enters into my fair value gap space on next week and just keep doing. Or if you're working all the time and you really don't have the time like I do to check the charts regularly, then, trading on the daily with the same strategy works too. So, yeah, I think I'll share more of this. It's so beneficial. It's been helpful. I do my trade recaps because I want to document my whole process and journey, and I hope in the process it helps somebody else as well in their journey. But yeah, cool. I think that's it.